Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On the show today, we preview what is likely expected as far as the first quarter growth for India is concerned, and that data being expected on Friday. And joining me to discuss what we can expect and what are the likely trends that will emerge is Indranil Pan, the Chief Economist of Yes Bank, and Aditi Nair, Chief Economist at ICRA. Welcome to the show. Viewers, before we go to our guests, I just want to take up the consensus expectation on the screen and bring that graphic up for our viewers, because the expectation is that first quarter GDP growth is likely at a 5-quarter low, and this on account of the first quarter, which was the election quarter, and government spending, capital expenditure that was seen to have dipped at least 35%. So more than a one-third of the expected government spending did not happen in the first quarter. That is now picking up, and therefore that is the baseline expectation that we have. Indranil, coming to you, what are the numbers that you are working with for the first quarter GDP growth expectation?
So our expectation is 6.4%, which is probably one of the lowest in the street at this point in time. Our GVA numbers are at 6.9%. Now, fortunately or unfortunately, the understanding around the GDP is possibly a little lower at this point in time, given the fact that contextually the GDP numbers for the current year would possibly look to be significantly lower than the previous year's 8.2%. But I think more we should be following the GVA numbers, in my opinion.
Okay. Aditi, your expectations and the numbers that you're working with.
Yeah, well, our expectation is even lower for the GVA, as Mr. Indranil pointed out. I fully agree that for understanding the momentum of economic activity, we should be looking at the gross value added growth and not the GDP growth in the current context. So for the GVA, our forecast is 5.7%, and based on what we understand will be the trend for indirect taxes and subsidies for Government of India plus the state governments, we are looking at a GDP growth of 6%. So there is some slowdown in GVA growth, which is expected because of government capex, as you pointed out, 35% degrowth in the center's capex during the election quarter, but also around a 20% degrowth in the state government's capex in the same period. Other than that, we had this surprising kind of slowdown in moderation in the urban consumer confidence that we got from the RBI survey, both in the May reading as well as in the July reading. We're wondering if that is coming in because of the heat wave that had an impact on retail footfalls, also perhaps construction sector and other jobs.
Okay. Indranil, before I come to GVA, I just want to expand on the slowdown in government spending, and Aditi added the state's number to that as well. Is that something that has now stopped fully, and Q2 onwards government decisions and therefore will have come back on track? Is that your sense?
Well, possibly not. I think but there is surely a roadmap that has been charted out for the infrastructure expenditure any which ways. So that's more on the capital formation side. Yes, the private sector has not picked up. We had always been expecting that the private sector would follow the government sector, but that has not really happened. On the revenue side, which is the government's sort of expenditure perspective, other than the capital expenditure, there is we should be expecting that to sort of come back, because the revenue expenditures as laid out in the budget is relatively not really muted, which necessarily means that the government's expenditure should not be a problem as we go ahead. To a certain extent, yes, I think there could be some issues on the infrastructure side, and we have been sort of seeing that happening also in terms of land acquisition, etc. And the momentum, especially from the state's perspective, is something that we need to sort of look at.
Okay. On the GVA point, what explains the gap uh, actually it is actually taxes between GDP and GVA, and do you think that is going to continue through the entire year?
Is that for me or Aditi?
No, Indranil, that question was for you.
Yeah, okay. Okay. So I think the gap obviously is the net direct taxes, and we are expecting that to be relatively the gap to be relatively lower in this year compared to the last year. Last year, the indirect tax collection was significantly sort of on the higher side. That, to a certain extent, would be contracting. Subsidy payments were relatively lower in the last year, but we are expecting the subsidies to payment to actually normalize in the current financial year. So the gap between the GVA and the GDP, which was close to 110 basis points in the last financial year, we are expecting that to close down to about 0.4 to 0.5% in the current financial year.
Aditi, is that your expectation as well, the gap reducing between GDP and GVA?
Absolutely. In fact, we think that the two will just be 30 basis points apart. So I'll just add to what Indraneel said. Basically, the way that the estimation is done is we go bottom up, agriculture, industry services, then we add the indirect taxes, subtract out the subsidies, and get to the headline derived GDP number, right? So last year we had a double-digit growth in indirect taxes, which may slow down a little bit, but not significantly. The big change will come on the subsidy side, which contracted a lot last year and will at best contract a little bit this year. That is why we expect the gap to close. From one quarter to the next, depending on when the subsidies are actually booked under our cash accounting system, there could be a much wider variation in this gap between the two from one quarter to the next. But for the year as a whole, we're expecting the gap to be around 30 basis points, which is relatively normal, with wide variation, of course, that we see from one year to the next.
Okay, relatively normal. Indranil, I come back to the earlier point that you made. Would it therefore be okay to sort of say and tell our viewers that as far as the first half of the year is concerned, it's been a weak one, and that will feed into further weakness, at least in the third quarter, if not the fourth?
Well, I think we need to sort of understand a few trends over here, in the sense that one of the reasons why GVA growth was also holding up, as Aditi rightly said, the way we do our estimate is not really from the expenditure side; we do it more from the production side. So there, I think what is happening is that the input cost pressures have once again sort of come back, while the manufacturers may actually be losing some amount of pass-through power of their input cost to the end users, because we are also seeing demand side to be slightly slowing down. Now, contextually, again, while the SIAM data, for example, shows auto sales to be really firm, we see that the registration data is not as firm, which
Okay.
necessarily means that there is a significant amount of inventory carry that is happening at the dealer level. Tractor sales also seem to be moving down, and in terms of the fuel consumption in the economy, that also tends to be relatively on the downside at this point in time. Plus, as Aditi also pointed out rightly, the consumer sort of behavior in terms of the forward-looking behavior in terms of the consumer confidence is weakening. The business confidence is also weakening, and the RBI also is attempting to bring down the credit growth, which we are also seeing in terms of the numbers playing out. So all taken together, there could be some downside in terms of the personal consumption growth. Government consumption, we are not really expecting to be very significantly off from what the budget is. But relatively, to a certain extent, we might also see some amount of widening in terms of the trade gap, because of the slowdown in the rest of the world, which may actually cool off the export growth to a certain extent. Export hit will happen because of the Bangladesh crisis. While in terms of reduction in the duty structure on gold, we can actually see an uptick in the gold imports. So all taken together, even from the consumption side, the year as a whole relatively looks to be slightly muted. But having said that, I think the next few quarters, at least the second half of the year, we should expect to see growth relatively firmer than the first half because of normalization of the government expenditure.
That was a very important point that you made about automobiles. In fact, Maruti is carrying, its dealers are carrying inventory at 38-day levels. And the Maruti chairman has said that they expect by the end of the year that will come down to 10 days. So even they are being very cautious in their commentary. Aditi, do you think subsequent quarters will be better?
I do. Q2, the government capital expenditure will normalize a little slowly. We had the budget at the end of July and we've had heavy rains in August. Typically, only after the monsoon is over, we really start, or rather, when it starts withdrawing, is when we start to see government capex picking up. So, the full headroom which is left for capex, we expect that the real momentum will pick up in Q3. That's where we expect that government capex will really support GDP growth. I'm also very hopeful for Q3 on another front. So far, the monsoon has been reasonable. Of course, there's a month left, and fingers crossed we don't have any episodes which are really disruptive. If the Kharif output ends up being healthy, then the farm cash flows will be probably fairly robust at the time of the festive season. So we could end up seeing a good pent-up demand kick around the festive season coming in from the rural side, even if urban demand stays a bit softer than what we've been used to over the last couple of years. So Q3 actually could end up seeing a rebound to above 7% in terms of the GDP growth, and hopefully that momentum may sustain in Q4 as well. For the full year, our GVA forecast is 6.5% and our GDP forecast is 6.8%.
Indranil, for you, what's the full year forecast both for GDP and GVA?
For the full year forecast, we have a GDP of about 7% and a GVA of about 5.6%, if I am not mistaken.
Okay. I want to come to the rural consumption part. First quarter, there is anecdotal evidence, some data that suggests that rural consumption was better along with higher demand for energy. In fact, in the rural part, two-wheeler sales, for example, have been up 20% in the first quarter. What's your sense about how the rural economy is likely to have performed, and how do you see it panning out in the remaining quarters?
Well, I think to me it's a bit of a mixed bag in the sense that if you really also look at what the credit story of the RBI is saying, they are slightly concerned on the credit deposit ratio. Now, the stress is actually coming more on the rural side. So, for example, if you look at the RBI's data, what they are saying is that the pickup in personal consumption loan from the private sector banks is relatively weaker, but the delta accretion in terms of the NPAs is higher for the private sector banks from this area. I think to a certain extent, to me, this is symptomatic of some stress at the lower income levels, which is basically again the rural side. So, how much of agriculture volume growth is likely to help, we still have to see. And the second thing is that we all know that the financial indebtedness of the domestic households have increased. So any delta income for the rural segment will possibly first go to repay the past loans than actual consumption. Yes, there can be, I agree with Aditi, that there can be some amount of blip during the festive season, but whether it will sustain is I think the real question. The other data that I also sort of saw is that the real wage growth of the rural sector is actually once again dipping down, and that to a certain extent is also concerning for me. So overall, again, as I started off by saying, it's to me it's a mixed bag. It is an evolving story, so to say, and we'll have to watch out for incremental data that comes out on the rural sector to figure out what is happening there.
Aditi, adding to that question, work demand under the Manrega program has also moderated year on year. That's the latest details that we have from the NCAER from their monthly economic review for the month of August. How is the rural economy holding up in your view, Aditi?
So, your earlier point about the electricity demand from the agriculture and the rural sector, in the period where we had the heat wave, certainly agricultural demand was very high because that was irrigation, groundwater being pulled up, essentially. In fact, electricity demand is now really not a bellwether of what's happening in the rest of the economy. It is very correlated with temperature, both for the agriculture sector as well as for the households. So we can't really use it as a gauge of what's happening in the broader economy anymore. My sense is, while there have been some green shoots for the rural economy, I'm not sure that it has been a rosy picture across the board. Last year's monsoon was very unfavorable and crop output was not great for the Kharif, the Rabi, or the summer season. Now, if we have a good Kharif season going ahead, then certainly we could see at least a temporary bump up in Q3. And I fully agree with Indraneel. We'll have to see whether it sustains or not. I think wait and watch. I mean, rural certainly is still in a wait and watch mode.
Okay. Indraneel, the RBI seems to be working with a slightly higher number than both of you and many other private pollsters is concerned. I'm wondering how will RBI read this data? They usually have early access, and going forward, what will it mean for their monetary management?
Yes, the RBI for the first quarter numbers are higher than this sheet, but as I think both Aditi and myself are trying to allude, is that the second half growth is expected to be a lot more robust. So the point that I'm trying is that the RBI's data is more sort of evened out between the quarters. And even if we get this quarter number relatively lower, the delta for the year as a whole may not be too significant for us compared to what the RBI and the government is trying to look at. Now the other part of the story, of course, is that yes, the growth is relatively on the weaker side, but the RBI is working with a lot of other things. One is they are clearly guiding towards a durable sort of momentum of the inflation to the 4%, which, as per their own current estimates, is not sort of aligning to the 4% very clearly. The second, of course, is the recent couple of studies that they have sort of come out with. One in terms of the real rates, which I think they will possibly be wanting to more sort of focus on the higher end than the lower end. So that also raises the bar for any interest rate cuts from the Reserve Bank of India, even though Q1 may actually show some amount of slowdown. The third, which is a more interesting study to me, is the bulletin paper on the persistence on food inflation and how it is impacting the inflation expectations. So from that perspective, also my sense is that the RBI could be slightly cagey in terms of fully factoring in this slowdown into their sort of broad estimates and look at a rate cut immediately.
Aditi, add to that.
The sense I have is we're going to get an undershoot on both the Q1 GDP number compared to what the MPC has forecast and the Q2 CPI number as compared to what the MPC has forecast. Technically, that could open the door for at least a stance change in October. But I think there are too many moving parts right now, including the fact that we're going to have 3 new external members. What is finally the outlook after the monsoon season is over, particularly for food inflation. So while this is our baseline, I think it can certainly meet with a delay. I'm not saying it's a very high probability of a stance change in October, but we're not ruling it out. At the same time, it will not take too much to actually delay the stance change further out.
One final question. Indraneel, every 5 years, the election quarter sees a slowdown in government spending. Between 2019 and 2024, what's been different? And I ask you to point us towards that difference from a point of view of at least looking at the future with better expectations in some ways.
Well, I think while you did talk about the election quarter, I think let's realize that this government is trying to build the blocks towards a more sustaining economy. I'm not really talking about Viksit at this point in time because it's quite a long journey for me.
Yes.
And being a financial economist, it's really a long journey for me. But at least what they're trying to do is that trying to put the blocks together, both in terms of ease of doing business and also ease of living. And if they align themselves to the trend that they are anticipating to, then possibly, if not a 8% and a 9% growth, we should see a sustaining 6.5 to 7% growth, and with a reduced volatility in terms of the growth. So that, to a certain extent, to me, also would help in closing the inequality gap. That's a very difficult sort of task for the government and for any government. But I think if there is a relative sense of sustainability of growth without, again, sort of interlying sort of shocks like the COVID, etc., etc., I think that is what is more desirable for the Indian conditions.
Aditi, a final point to you. For the average viewer, would it be fair to describe the current situation and the government's handling of the economy that this year, or at least a better part of it till December, is going into settling down in a new political reality which is impacting the political economy, and it's only 2025 calendar year onwards that we will see some serious new impetus coming in, perhaps starting with the budget?
Let me put it a different way. This year, we actually still have a double-digit capex growth penciled in for Government of India. Next year, when we move towards further consolidating the fisc and bringing the fiscal deficit to GDP ratio down to 4%, 4.5% of GDP, either we're going to have to get a revenue compression, or we're going to have to live with a slower growth in capex. So it'll be interesting to see which mix we get, because the multipliers of the two are quite different. And then, what does it mean for GDP growth in the immediate term? Over the medium term, my sense is the same as Indranil's. 6.5 to 7% seems to be a reasonable range for Indian GDP on a sustainable basis in terms of growth. Given where we are in the global economic cycle, I don't expect that exports are going to give us that further bump closer to 8% over the medium term.
Okay, viewers, I'm reminded of what happened when the 8.2% number flashed on our screens. I don't know if a similar surprise awaits us this Friday, but it's very clear. Some of the expectations, and especially from a market point of view of growth and its pace, will need to be tempered and changed and aligned with the broader realities that we are seeing, and that perhaps will be the biggest message out of the data that we will see on Friday, and we'll come back to our experts and economists for decoding that data as well. Indranil and Aditi, thank you very much for your time with us today. With that, it's a wrap on this preview of the first quarter GDP. We will continue to be tracking that, especially how the markets react to this data. So stay tuned in. I'll see you again. Until then, goodbye.
With every passing day, the deep sexual rot in Mollywood is being exposed. The Hema Committee report has opened a can of worms in Mollywood, with the biggest actors, veterans of the industry,